How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, I'm going to be sharing with you all and breaking down the top couple of stocks and ETFs that I'm personally watching and looking to trade now that we're officially in February in 2020. And I also want to share with you guys what the stock market did over these past 5 days of trading, in this last week of trading, just by simply looking at the S&P 500 here, so we can get a better understanding of the technicals of it and maybe some future action, maybe where it could be going here in the future based on kind of what the chart is telling us. And I also want to update you all on the coronavirus, businesses affected by this virus, and kind of how I'm looking to trade this market in a very volatile time. As many of us, maybe not all of us, but many of us know, the virus outbreak here has been putting a lot of pressure on the stock market. Many businesses have been getting crushed. So I just want to share some thoughts with you all regarding that. Again, an update and kind of just how I'm trading this upcoming week, or how I'm planning on trading in this upcoming week. So before we do actually get into all of this good stuff, all I ask from you is, if you enjoy this video, simply go down below for me and hit that like button, and also consider subscribing to the channel if you want to see further stock market content like this. And if you actually want 2 free stocks from Webull, I have an affiliate link down below in the description box, where if you actually deposit $100 into that link, or into that account using my link, you get 2 free stocks valued up to $1,400. So go take advantage of that. Again, link down below in the description box. 2 free stocks, $1,400 potential. That is pretty big. So let's talk about what the S&P did over these past couple of days, and let me tell you all, it's been ugly. And again, I'm sure many of you already know this, especially if you're an avid watcher of my channel and you're just a person that pays attention to the markets day in and day out, right? We can see here the S&P 500 in this past week alone, it peaked out at around 3,300, almost 7 points shy of 3,300 to be exact, and it fell all the way down to about 3,214. So not too crazy of a range here, but still, from bottom to top, we lost around 2.25% here on the S&P 500 during these past 5 days of trading. And if I pull up this 10-day chart, you guys can see it actually got, or rather, it was uglier the 5 days prior to these past 5 days. So really, the past 10 days in the stock market has been very, very ugly. We can see the S&P's gone from 3337, which is the all-time high on the 22nd of January, all the way down to that 3214 level, which we just talked about, which from that all-time high down to that level was is a 3.5% kind of a pull down, right? And judging on the 4-hour chart on this S&P index here, like I've been mentioning, this pull down has been needed. We saw actually the S&P went on a rally here where it didn't see a 1% pull down for, I think this is right here off the top of my head, for the longest time in I think it was years, guys. And I think many of you know which statistic I'm referring to here, but the gist of it is the S&P was screaming for a pull down. It was very calm, steady going up, steady going up. It was screaming for some sort of negative catalyst to drop the market. And here comes along the coronavirus, and that was that little negative catalyst that kind of rocked the markets here. And you can see, based on a technical basis, and like I've been mentioning in these videos, we may be going down to that 180 SMA, which is roughly putting the S&P, or which would rather put the S&P at a 3170, 3175 level. And from the top, at 33.37 down to that level, that would be a 5% sell-off, which we've seen in the past happen. And guys, from the bottom of my heart, I know the S&P needs this. This is a very, very doable, and not even doable, a needable. That's not even a word, but the S&P needs this, guys. The S&P needs this. The whole market needs this, because we got to an overextended and overheated point in time. So let's kind of talk about this coronavirus a bit further. Well, not too in depth, but let's just do a briefing of what these just basic numbers are. So now, as of Sunday, I don't know if these numbers are 100% up to date, but as of this morning, when I did write this down, more than 14,300 people infected globally from the coronavirus, at least 305 people dead. More than 25 countries contain infected people, 25 plus countries, and guys, this is spreading like wildfire here. Many people argue that some of the other viruses like SARS from 2003, these were more deadly than the coronavirus. But you can't fail to acknowledge how quickly this thing is spreading, even though maybe it's not as deadly, right? But still, last week, there was a day, I believe, where it was only 5,000 people infected globally. The next day, 7,000. Next day, 9,000. Now, on Sunday, it's 14,000. So it's growing every single day, guys. And we got another case here in the United States. A University of Massachusetts Boston student was confirmed Saturday to be the 8th case of coronavirus in the United States, one day after U.S. officials declared a public health emergency. On Sunday, the first death outside of China was reported in the Philippines. So that's pretty big. Now people outside of Wuhan, the epicenter, are dying. Philippines reported a death. And on Friday, going back to 2 days ago's news here, U.S. health officials issued a federal quarantine order for the 195 Americans evacuated from Wuhan, the epicenter of the outbreak. The group will remain at a military base in Southern California until mid-February, said Dr. Nancy Messonnier. I'm not even going to try and pronounce that. Director of the National Center for Immunization and Respiratory Diseases. The government hasn't issued such a quarantine order over 50 years. So that's pretty big there, guys. So now we have the 8th official case here in the United States. And a lot of people are, again, saying that this thing is not as dangerous as SARS. And even the National Security Advisor, Robert O'Brien, said that right now there is no reason for Americans to panic with regards to the coronavirus, adding that this is something that is a low risk, we think, in the U.S. O'Brien says that the U.S. is working with Chinese authorities, its health authorities, and the World Health Organization to determine where the health virus came from. So we have people saying that China's lying about these numbers. We have the United States, on the other hand, saying it's not as bad as people think it is. We have people getting very scared about this, spreading across all of the different countries. So the truth is, guys, amidst all of this panic, all of these different news outlets telling a bunch of different stories, right? We may not be getting the truth. We are getting the truth. The truth is, at the end of the day, we're going to have to take this day by day and really just see how the market reacts to it on a technical basis. There's no way we can predict what the market's going to do this week, what the market's going to do next week, due to how crazy it's been and crazy volatile it's been. A couple weeks ago, we could have had a way easier prediction of what the market was going to do because there wasn't a lot of tension. But now with the tension, this market could tank. This market could bounce back. We really, really don't know, which is why I'm approaching this week heavily in cash. And I mentioned that in Friday's episode and in last week's videos. I'm heavy cash right now. I'm in a couple swing positions, sure, but I'm mostly cash, looking to see what the markets do. Do the futures open up red, which is something that I'm actually watching for here in 45 minutes? Do the futures open up green? This is going to be very interesting because let's say the futures gap up or gap down hugely. That's going to issue more panic selling heading into tomorrow's session, in my personal opinion. So now that we got a little bit of an update on the coronavirus, kind of how I'm approaching this week, more cautious, more cash heavy. Let's just run through some stocks here. Some that are slowing down in terms of their price momentum due to this whole Chinese coronavirus breaking out, and due to businesses in China, these American companies operating in China closing many of their locations. And we saw that this is actually going to affect Q1 earnings for a lot of these companies, and it's actually going to affect the Chinese GDP, which, that's pretty huge, guys, considering that Chinese, their economy has been suffering already as it is. So this is kind of throwing another wrench into the, into the, I don't even know what the saying is, but you guys know what I mean. It's throwing a wrench. It's just hurting something that's already hurting, and that's just not good, right? So Apple is the first stock that I'm watching this upcoming week, ticker symbol AAPL, and this is a company that has been killing it. And like I said, this momentum is slowing down here due to the coronavirus outbreak. And we can see 328 is the all-time high here on Apple, and now we're trading about 20 points below that at around $309. And we actually saw a 4.43% decrease in the stock's price in this past Friday's trading session. So Apple, guys, actually just announced that they're closing all of their offices and stores in China through February 9th, and that includes 42 stores closed. So that's pretty big. I don't know if this will have damper on the stock heading into tomorrow's session, because I believe this news did come out either yesterday or Friday when the market was closed, or maybe even Friday during the market. But I don't know if this is going to damper the stock even further. If it does end up creeping back to maybe low 300s, maybe even to the high 290s, I would heavily consider buying a little bit of a swing position there. And honestly, guys, I haven't said that in a long time with Apple, because we really haven't gotten any sort of pull down of this magnitude. And the truth is, this pull down, the magnitude of this pull down is nothing crazy, about 5-6%, which goes to show how much of a tear Apple has been on. This thing hasn't even pulled down a couple percentage points, it seems like, for months at this point. So this is definitely worth considering nibbling some shares, at least in my opinion here, at around 300, 305, and I'm sure if we see more downside pressure here tomorrow, that could be a perfect opportunity to maybe just pounce on it, at least in my opinion. And again, every stock I'm sharing here is my opinion. Don't do anything based on my opinion. You always have to do your own research. So the next big tech beast that I want to talk about is Google, guys. So Google is the last one out of the massive tech monsters that has yet to report earnings. Apple reported, Facebook reported, Amazon reported. They crushed. Amazon absolutely crushed it. Facebook actually dropped. So now that the big, tech names, it's kind of a mixed bag, right? I'm interested in seeing what Google is going to do. And Google, they hit a high here at 1,500. Now we're seeing a bit of a pull down here as the markets in general are pulling down. This past Friday, down 1.5%. And honestly, take a look at this. This is a level of support here, guys, 1440, 1430. I'm thinking if Google does break this heading into the earnings tomorrow, is it tomorrow? Yes, it is tomorrow, the 3rd. That could open up an opportunity, especially if they do well on earnings. And this could be a nice entry, I believe, at the 180 SMA, maybe $1,400. But again, that's if it breaks 1430 as a support. And you know me, I'm not buying before earnings, but again, if it sets up perfectly where we pull down, maybe we get a decent earnings or positive earnings, that could be an opportunity to just consider buying, in my opinion. And speaking of earnings on Google, their EPS estimated is $12.60, and their revenue is estimated at $46.93 billion. So the next stock that I'm watching here is Facebook, ticker symbol FB. And they reported earnings a couple days ago, and the stock got crushed, down about 8% on that day, down another 3.6% on Friday. And to be honest, guys, I think this is a dip buy opportunity on Facebook. Sure, their earnings weren't that great compared to estimates, which is why the stock did end up getting crushed. They reported $2.56 in EPS, as you guys can see here above the little bell on my ThinkOrSwim platform, and their estimate was $2.53. So they didn't crush earnings by any means, and that's kind of why the stock is seeing this downwards pressure. So for me, I think this is worth considering looking at, or maybe even considering nibbling some shares. I already have shares here at around 206, 207, and I do plan on buying a little bit more tomorrow, maybe even Tuesday, depending on how the markets do end up doing. So Facebook's one of those that really doesn't have too much connection at all to China. This next one, Microsoft, ticker symbol MSFT, this is one that might be the one that's screaming buy me the most, right? Because Microsoft here, it got crushed from 176 to 170, not really crushed, but it pulled down about 7 points there. And they actually destroyed their earnings. Unlike Facebook, they destroyed their earnings. Microsoft's EPS, $1.51 versus $1.32, and their revenue came in at $36.9 billion versus $35.67 billion, and they saw a 1.5% pull down. So if this holds 170 or maybe even pulls down to 166, 167, let's say we have another red day this upcoming Monday, that to me is going to be a very interesting point to maybe consider buying some MSFT here. And of course, I'll let you guys know what I end up doing. So NVIDIA, ticker symbol NVDA, this is one that is right around the 180 SMA support here on the 4-hour chart, which has proven to be a support over the past couple of months. So this is an interesting dip, right? We saw a 260 dip down to about 235, 260, 250 being that resistance from a couple months ago. You guys can see it on, actually maybe even a couple years ago. On the 3-year chart, you'll be able to see it, right? 250, 260, that's a level of support, or resistance rather. But now we're treading waters with 235 to around 240. So for me, NVIDIA, to enter it, I'd need to see some sort of push back into 240, and from 240 up to 250, 255, that's the range that I'm watching on NVIDIA, and they're actually reporting earnings as well here in the next couple of days actually, on the 13th of February, and their EPS is expected to be $1.66, and their revenue is expected to be $2.96 billion. So the next one worth watching, which is seeing a bunch of heat right now from China, is Starbucks, ticker symbol SBUX. They've closed nearly half of their locations in China, and the locations that are still open, they're actually seeing a lot of slowing business. The sales at those locations, they're slowing down, which makes sense because coronavirus, the virus is spreading. People, they're not really going out in public as much as they would be if there was no virus that's spreading around, right? That makes sense to me, and I'm sure it makes sense to you guys out there watching. So on a technical basis, Starbucks is not looking too great. It's a falling knife right now. You know, we're about to test maybe 84 bucks as a support here. If we drop from there, maybe $82. But either way, I think it's worth watching because as these markets, if they do come back, maybe the coronavirus becomes contained, it gets a cure maybe for the virus, and it kind of dies down, I think Starbucks and a bunch of these other stocks that we've been talking about on this video, I think they're just going to inevitably turn around as the markets in general kind of breathe a sigh of relief. And you guys saw that chart I shared, a couple videos ago about the different viruses we've seen in the past couple of years break out and the market's performance after these viruses have broken out. And every single time, the market has increased despite there being volatility in the beginning of the virus outbreak. The market still went up, guys. So I think in the next couple of weeks, especially if there's some kind of cure, the virus becomes more contained, I think that the markets will end up bouncing back. And again, I'm sure many of you all will agree with that. And you'll see Starbucks, Apple, Microsoft, a lot of these large cap names, they probably will come back. So let's talk about a couple of more here. Tesla, not much to say about it, but just keep an eye on it, maybe to see if this momentum continues. They actually have some pressure here from China. They actually closed down, I believe, their Shanghai factory for an extra week and a half. And this will probably impact the profitability for their quarter, as Zach Kirkhorn said, which is the CFO of Tesla, I believe. So that's worth watching in the short term here with Tesla. Am I looking to buy it here? Nope. But I think it's worth watching regardless. Netflix is one that doesn't really have much Chinese exposure at all, really. As we can see, the stock hasn't gotten hurt too much over these past couple of days. Netflix only down 0.75% here on Friday, and it's holding 340 quite nicely. So for me, anything above 340 on Netflix is gravy. I think 340 to 360 is the move I'm looking for it to make, or that it's kind of setting up to make here. And that is why I'm in Netflix and I'm interested in really buying more of it. So Disney is one that's been getting crushed a lot, and it has exposure over in China with its Shanghai location, which actually has been shut down here, I believe, since last Friday. So that's definitely going to affect Disney's Q1 earnings, and especially their earnings, obviously, in China due to the location being shut down. So Disney, keep an eye on 135, 140. This is the level that we're trading in right now. I believe overall, if we break 140, this could be an overall break in Disney's pattern to the upside, which could offer some more upside. But until then, I'm simply just watching Disney, not too interested in jumping into a trade quite yet. So very quickly, other ones that are more hedges to the market, because remember, guys, this is still a fresh virus. Although we've seen charts and data that the markets recover after 6 months of a virus outbreak. In the beginning, there's still volatility and there's still potential for it to go down before rebounding, right? So as of now, we could still go down. So what I'm watching is TVIX, which I traded on Friday, which was up 22% on Friday. This goes up whenever markets drop and whenever there's a lot of volatility in the markets and whenever the VIX, which tracks volatility, goes up, right? So I'm watching the VIX, I'm watching TVIX, I'm watching SQQQ, which is a way to go short the NASDAQ, right? It's a 3x leveraged ETF where if you buy this and the NASDAQ drops, you're going to make money, right? And let's say the S&P drops, you can trade SPXS, which is a 3x leveraged ETF that goes up 3 times whatever the S&P is going down. So let's say, for example, the S&P goes down 1%, SPXS for that day will be up 3%, and this is, again, a great way to just hedge against the markets when there's downside and really hedge against your long-term positions in the stock market. Gold, precious metals, definitely watching this, up $5.50 on Friday, up 0.35% for gold. Silver is another one I'm watching, currently trading at around $18.03. And guys, really, that's pretty much it for what I'm personally watching this upcoming week. Sure, we can go all day about more stocks, but the truth is, I'm really focusing heavily on just the overall markets and just the health of these markets in this time period of the coronavirus outbreak. And I'm really focusing on that as well to see if it subsides, if it continues spreading, if more people are being infected, because I know that this is going to have, at least in the short term, effects on the stock market, mostly negative effects on the stock market, right? So some Chinese stocks maybe to watch, LK, Luckin Coffee has gotten crushed here, Alibaba has gotten crushed, ticker symbol BABA, BABA. Another one, JD.com. These are all ones that, again, have gotten killed. And if you're a buyer of stocks for the long term, these are the opportunities that you need to look for to buy into a company, right? Don't buy in. You can, but I don't really think buying in at all-time highs is wise. Sure, you can do it if you're dollar cost averaging long term, but if you're looking to build a fresh position, I always think it's best to buy into some weakness first. And now for the Chinese stocks, and quite honestly, a lot of stocks out there, not just Chinese stocks, we're seeing weakness, which again could open up that long-term opportunity for those of you guys that do believe long-term in the stock market. So JD.com, another big one, TCEHY. This is Tencent Holdings. This is down 2.3% Friday, down from 52 down to about 47 over these past couple of weeks. And of course, the last one here is NIO, ticker symbol NIO, the electric vehicle maker from China. This was down 30 cents on Friday, down 7.35%. And this is another one that, now we're seeing some weakness in NIO now that we're getting this coronavirus outbreak. And it could be a good time to buy, at least in my personal opinion. Again, due to the weakness, opening up long-term value, at least for the long-term investors out there. Obviously, shorts, it's a different story. But for longs, this is the time to buy if you want to build wealth, at least in my opinion, across different stocks, not just these Chinese stocks, across all stocks, generally speaking. When they're weak, that's the best time to buy. So overall, that is it for this video, guys. Not too sure if I ran a bit too long today. Doesn't really matter. Hope you guys did enjoy it. If you did, feel free to go down below and hit that like button, and also consider subscribing to the channel if you want to see further content from me. And don't forget those 2 free stocks valued up to $1,400. You can get those linked down below in the description box from Webull with a simple deposit of $100. So I'll catch you all in the next video. Thanks again for watching. As always, means a lot to me, guys. All the support I've been getting, it's just fantastic. I'll catch you all again in the next video. Peace out.